Hi friends, welcome back. So I want to have a chat with you about the markets today and also to where to put your money in 2024. It's a common question that people have, and I want to preface this conversation with saying that I don't sell any scammy Discord, no scammy classes, and I don't do any scammy buy or sell alerts. I understand that YouTube is filled with all these kind of things, and there's many channels out there that are going to tell you the hottest stocks all the time. I'm just not into that stuff. Frankly, I have a very simple philosophy. I can give you a fish, but it'll only feed you for a day. If I teach you to fish, you guys know this, it'll feed you for a lifetime. And essentially, if you don't know, I was a professor for about 10 years, and it just comes from being an educator for so long. I will say, however, I do have a book, and I mention this book from time to time. It's called Positive Angle. And if you enjoy the channel and if you wish, you could sit down and have lunch with me, for a couple of weeks where you could, essentially spill the beans on all the secrets to life. I do have it in the book, so that part is true. But the book is really centered around bettering your life and helping you to help yourself and to be a better person and always be improving. So it's called Positive Angle, and you can pick it up on Amazon. Oftentimes on YouTube, there's a common sort of advice, and it's not bad advice at all, is like, hey, just throw your money in the S&P 500 and you're going to be good. Yeah, probably. It's not, like I said, it's not bad advice at all. So these are different choices of ones. Pick the one that makes sense for you. You want to be looking for essentially management fees, and depends on your brokers that you're in, and just pick one that you like. The other issue is too with this kind of thing is that regarding the S&P 500 is sometimes there's channels that say, only buy S&P 500, only buy index, do not buy individual stocks. I don't really agree with that philosophy. I think you can do both. I don't think you have to choose one or the other. Because guys, if I say, for example, only be in the S&P 500, and you can see it's up 27%. That's pretty good the past year, right? There's nothing wrong with that. But I'm not going to just make stuff up and say that, hey, Nvidia was a terrible place to be. It's just simply not true. You can see right here with the numbers. So I tell you the truth on these things. So I think the problem with YouTube though regarding individual stocks is most of the time on YouTube they're going with the hottest stocks, and oftentimes companies that are bankrupt or losing all their money, etc. And people end up putting their money in something like a Lucid. I'm just using Lucid as an example here. So yes, if you're Nvidia, fantastic, but if you did individual stock in Lucid, not so fantastic, right? And so this is something why would you want to do something like S&P or index fund, is because it diversifies your money enough to where you don't essentially put all your eggs in one basket. You're right. You're spreading out your risk, which is a really important lesson to learn. And so I just give you the truth about these things. You can do both. You can do index, you can do individual stocks. The thing is, for the average person, the reason why the index advice is good, and I'm just giving you a list of various ones you could do, is because then you're not stressing out about picking your own stocks, and you don't have to worry about following the news every single day, etc. However, I want to say that if you're watching this channel and we look at the news every single day, you're probably well informed and you're learning about the markets, and you do want to buy some individual things because, again, I just use the example of NVIDIA. You're killing it if you do that this year, but I always state the risk because I think people and other channels don't do that enough. Let me show you some of the things that I look at when like seeing how the markets perform, et cetera, and it's different than what other people do. So first is I think it's fun to talk about this stuff is, okay, what is moving and what is not moving? So I have this list here. This is the U.S. equity sectors, and there's different sectors here. So you got energy, tech, industrials, healthcare, financial services, consumer staples, basic materials, consumer discretionary, communication, utilities, and real estate. So actually, you can get pretty good exposure to stuff and still be diversified by saying, hey, I want to be in maybe 6 sectors, maybe not want to be in 2 of them, right? That's one way that you can think about this stuff. And you can also look at the performance, say the last year. So last year, it's been tech, communication, and consumer discretionary have been leading. Utilities and real estate, not so great. and sort of, why you watch the channel every day and why I like building community with you. And then we could sort of like, okay, these are the big names in said sectors. These are the CEOs that are like, shaking the things up in a good way, maybe in a bad way. These are the sort of, pressures that are pushing it down, or these are the tailwinds that are pushing things up. So, we talk about sectors, we talk about individual companies, et cetera. But I'm giving you a basis points to where like, okay, how to think about this stuff. Again, if you don't want to mess with that things, just throw your money in the S&P 500 and you're going to be pretty good, right? The gist of it is that just keep accumulating, don't lose money, and start building wealth. The sooner the better is always great. But again, I said if you do want to pay attention to stuff and you're watching the channel, you probably do. This is one thing I like to look at. And the cool thing is about this stuff is like, these are actual particular funds if you want to, and these are the symbols, etc. if you want to do any particular sectors, right? The other issues too, if you want to do a particular philosophy, you can do that. So if you want to go growth, quality, momentum, right, value, etc. If you want to do dividends, these are just some examples. There's a lot of different things out there. The reason why I'm showing you this kind of stuff, and this is more sort of an ETF style investing, is like, it's not necessarily that you have to put the pressure on yourself to pick an individual company and 100% have to get it right. You can say like, this is my strategy, this is my risk tolerance, these are my goals. One of the things I want to state very clearly is that everyone is in a different position in their life. So for me, when I do YouTube every day, I just want to do general education, general news, inform you about the markets, this kind of stuff, because I don't know who you are personally. I don't. There's no way I can know who all of you are. I have like 30-some thousand subscribers. I don't know every person's individual circumstances, but I can give you general education. Because, for example, if you're a young kid, you're thinking, okay, I want to grow my wealth, eventually want to buy a house, etc. You have different goals. Maybe if you're an older person and you're retired, you're like, hey, you know what? I just want to be getting income, right? I don't really want to take any risks right now. I just want to preserve the capital I have and just get income from that. So it's going to be different for you. Someone asked a question recently is, I think it was Jimmy was the name, was saying, hey, what do you think about financial advisor, etc. My personal opinion on this kind of stuff is, generally speaking, these kind of people are trying to sell you lots of insurance and stuff like that, which is their job. They get a commission for that. Moreover, they can give you tailored advice, which isn't necessarily bad. The best thing is that you do what makes sense for you. I just can't tell you what to do in particularly. I just try my best to give you some general things to be thinking about. The other issue is don't forget about bonds. They're not sexy. I get that. They're just not sexy, but you're not going to lose. And that's one of the key sort of lessons that I learned in this game is just don't lose. If you take risks, make sure that you're balancing out with things that you're not going to lose, right? And keep your risks small so that even if you lost everything on, say, a risky asset. So let's say, for example, some people really like, crypto, right? Which is fine. I'm not into it myself, but I also can read charts. I'm not an idiot, right? So again, I'm not into this stuff, but I'm saying, hey, if you're really into this stuff, and some people are, I mean, like I said, I can read charts. So you've done great. You've doubled your money in the last year or so. So, if you want to put a little bit of money in that, be my guest, right? I'm not into it. I make that really clear. But I also, you read charts. So the point being though, is that, we live in a world where people feel like YOLOing is the best thing to do. And so, it gets them in a lot of trouble. Let me show you what I'm talking about here, how the YOLOing and sort of differences. So, actually what I have right here. So like, for example, this is popular stocks on YouTube. Okay. Some of these have been delisted, so they're no longer on our markets. So I'll start with those. So this was like a Tattooed Chef. This is like a Shift Technology. Mullen, I guess it's still on our markets, but these two have been delisted. So basically they went to zero, basically. And if you can see these, so these are some popular. So on the upside, right? Palantir has been a popular one, Riot, DraftKings, Robinhood, etc. But there's a lot more losers here than winners, right? NEO was a loser. Virgin Galactic was a loser. ChargePoint was a loser. AMC was a loser. Mullen was a loser. Tesla's been a loser. It depends when you got in, right? So some people say, no, Chris, the last 5 years has been awesome. Yeah, but it depends where you got in, right? If you want to do 5-year performance, you can do that. But the point is, though, is why I'm showing you this stuff is, if you only watch YouTube or how can I put it? If you watch the hype channels and the hot stock channels, right? Because even though I complain about YouTube and we all complain about YouTube, it's not like everyone out there is a complete scammer, right? I'll say most of them are, but not everyone. I try my best to educate you. But point being though is that if you just follow the hottest stuff, the chances are you've lost. There's a real high chance of that. Let me show you kind of stuff that I'm interested in. Let me go here. Actually, one second here. And you can see it's not like 100% of everything that I like is green all the time, all day, every day. No, not necessarily. But one of the things that you want to be thinking about is how can you balance out your losers from your winners, and also to be diversified enough to where like you're going to be okay. You guys can see here. So Microsoft's been doing really well. Actually, we do it by about a year here. Microsoft's been doing really well. Caterpillar's doing great. Apple's been going down a bit, right? On the losers, Archer Daniels Midland has not been doing so great this year. They had some weird accounting thing. Lockheed Martin's been down a little bit, right, et cetera. But I'm not worried that Lockheed's going to go to zero. I'm not worried that Archer Daniels is going to go to zero. We're talking about weapon stock, and we're also talking about food stock. I always talk about these because I'm just not worried. Talking about DePosco up here. This is a Korean company. It's not really popular on social media, so it doesn't really make any point to make videos about said thing. The point being, though, is I'm showing you the stuff that it's not sexy. It's not sexy at all. It's not sexy to talk about McDonald's. It's not. So I'm not going to make video after video after video shilling McDonald's. But what I do want to show you with this kind of stuff is just a contrast. A portfolio that would be fairly well balanced. Exposed to a lot of different things, like for example, Occidental. That's the Warren Buffett oil stock, etc. People don't really make video after video about Occidental. It's just not cool. Remember the kids, they just want to hear about, go back to what the kids are doing. They just want to hear about Lucid or ChargePoint or Mullen or whatever, Shift, Neo, these kind of things, Tesla. That's all they want to hear. And so some channels just talk about Tesla all day, every day. Again, I'll reiterate the point is there's more to the world than just one particular stock. And I think the main risk that too many retail investors have is they pile into just one or two names. And they might win big, but also too, they set yourself to lose big. So the way that you want to structure things and think about this stuff is okay, put yourself in a position that manages your risk, right? Don't be too overexposed to one thing. Also too, don't get involved in the hype all of the time. And set yourself up for success by essentially building your wealth by putting in things that aren't going to go to zero and have no chance of that. So that's essentially why people do the index fund thing. It's a way to balance out your risk and not have to think about it. And then you just keep throwing money in there and you're going to be great. However, I just say, however, guys, for those of you who want to spend time doing this stuff, myself included, that's why I do this stuff. I enjoy it. It's fun. You can take a look at individual sectors. So here's an example. So this is different ways to track that. And so let's do the year here. And it's actually really cool because you can literally see kind of what's been moving and shaking. So you have the communication up here and you have tech here, right? And if you actually click here, you can actually see what's in it and how they're weighting it. So this would be like your Meta, your Netflix, your Google, right? News Corp. If you want to do that, that's like your Fox. Video games, EA, Take-Two, etc. And essentially it balances out. So like lately, video game industry has been down. Actually, a lot of those stocks have been down. They've been doing layoffs, etc. But if you have like an industry fund, it's going to balance out with say hey, Nvidia is going up, etc. If you want to take a look at just for example, hey, I want to do some industrials, right? This is the XLI. This would be looking at, it would be included GE, Uber. You have Eaton in here, Ingersoll Rand. I have a friend who works over there actually, etc. There's a lot of different things like no one's gonna be making videos every day on YouTube about Ingersoll Rand, but it's a legitimate company, I'm just using that one example. I think Uber's had a great year this year, etc. But it's hard to predict. It's hard to predict which company is going to have the fantastic year and which company is going to be the big loser. So that's sort of why you protect yourself with doing sectors or just going with the S&P 500. So I hope you guys understand kind of my philosophy on this stuff. If you want exposure to different things other than the S&P or individual stocks, you could actually do country ETFs, which is not bad. In fact, Japan's been a real good performer this past year, and actually you can just kind of sort this by here. So you can see US and Japan have actually been leading. Brazil hasn't been that bad either. And no one really makes videos about Brazil because it's just not exciting for people on YouTube. So guys, every day I could talk about all kinds of stuff on this channel, but I have to be aware that who the audience is, etc. So that's why I don't do this stuff all the time. But if it's interesting to do, we can. You can see compared just, for example, Brazil is outperforming China in the past year. You can see it right here. France has been okay, but maybe you're better off in Japan. There's lots of different ways that you can think about this stuff. And so, when I look at all these different, the options out there, again, the simple choice is just pick an S&P, throw a bunch of money in there, and you're going to be great. Okay. If you do want to pay attention to this stuff and manage it a little bit more carefully, you can, and I got no problem with that. And again, you have to do the risks and make the decisions based on your particular circumstances. So that's up to you. So you guys can see I do like to look at individual news also. So for example, Boeing had a horrible news today. They got hit by an FAA report. Essentially, if you guys remember the whole thing, they had a manufacturing issue. I think there's bolts weren't put into their to their planes or something, and essentially their planes are falling apart. The issue was, I guess there's a culture where if a worker tells the management that something's wrong, then they'll just want them to be quiet, just so they keep manufacturing said planes as fast as possible. The other issue today was Zoom, I guess, had a decent report, and I think they're doing buybacks, so that stock was up. And we also have, this was probably one of the more interesting stories. If you don't know, Kroger was on schedule, or they plan to buy Albertsons. So these are the big grocery chains in the USA. I guess the FTC is going to try to block this. So this is actually pretty interesting. And we were talking about this recently, this kind of stuff, because if you remember, it's Capital One, talking about credit cards now. Capital One wants to buy Discover, and we'll see if the FTC steps into that one. So they may end up blocking the Kroger Albertsons deal. And the basic gist of it is that if Kroger buys Albertsons, what's that going to do to grocery prices? Kroger would say, well, it's going to be awesome for consumers. There's arguments for or against. So maybe the for would be, that they can make supply chains better and then cut costs, or cut costs with employees, et cetera. But, we'll see what that happens with this. It may not matter what we think. This matters what the FTC thinks. And also, I want to mention too, Dune is coming out. We're actually going to go see that tomorrow. I'm really looking forward to it. I think it's going to be a great movie, and I'll share my thoughts after I see it. So please share your thoughts in this video. I'd love to hear what you have to say, and I'll catch you next time.